Hey, what's up, everyone? Welcome to a review of a trade that we just did. This is an exciting trade because when there's not a lot of volatility in the markets, we can use what's called a calendar spread in order to take advantage of the lack of volatility. Okay, so if you're looking for another way to trade, right? If you're looking for another strategy to begin to implement, this is a great strategy to really begin to learn. So what we're going to do is we're going to take a look at this XLU calendar spread that we put on earlier in the week. Expiration was Friday. Now, what you're going to see are two videos. You're going to see a video of the day that we put the trade on, and then you're going to see a video of the day that we closed the trade. Okay, and so without further ado, we're going to go ahead and get right into that first video. Hey, what's up, folks? So here we are. We are taking a look at our trade that we put on. So I want to draw your attention up here to the trade itself. Okay, and so what we have is we have two sold options expiring this Friday. Okay, so we're having them expire. So we sold the 58 put, sold the 58.5 call. Okay, we bought the 58 put and we bought a 58 call for a significantly later time frame. Okay, and so what you're going to notice immediately is we have a 58 put for this Friday that's worth 31 cents, and we have a 58 put that expires the 26th of April for 93 cents. Same for the 58.5 call that's currently worth 14 cents, and the 58.5 call for April the 26th is worth 71 cents. And so we sold 5 of these for a debit of $1.19. Okay, and so let's go ahead and take a look and see what that looks like on the IV percentiles. And so why did we get into this particular trade? Okay, so we got into this particular trade because you can see XLU down here at the bottom. Okay, and so this is our IV percentiles ranked greatest to lowest. Okay, and so we're greatest up here. We have GDXJ and GDX, our miners and our junior gold miners at the highest IVs, and you go all the way down. These are a premium ETF selling watch list that we look at every single day to kind of dictate the strategy that we're going to use. We get down here to XLU, okay? And so XLU is our utilities ETF, and it has an IV percentile of 0. Okay, so it has an IV percentile of 0, which means that these options, right, the options that are going to be closest are not going to be worth a lot of money, because what do we know? We know that options that have a higher IV are, they tend to be overpriced, right, which is why we have a specific strategy for IV percentiles over 70, for example, and over 30, but not over 70, and at 0, right? And so what we want to do is we want to take a look at this IV percentile right here at 0. And so that's going to dictate the strategy that we use, okay? And so this strategy means that what we're going to do is we're going to enter into a calendar spread that you just saw. Okay, so let's take a look and see what that actually looked like. All right, so here we are, March 13th. And so what we have is we have our risk analysis. Okay, so in our risk analysis, what we're looking at is we have, this tells us exactly what the curve should look like. Now, one of the things that we know about a calendar spread, right, is that this line, let me go all the way back. Okay, so what we know is that this line, right, changes, okay? So this blue line is our equity curve, our profit analysis curve at expiration on the 16th, okay? However, what we know is that because these bought options are also losing value due to theta, right, theta decay or time decay, we know that this blue equity line, right now it's looking like we could get a total of about $200, right? What we know is that in a couple of days, this might be down here at 175, right, or 150, because these long options down here are losing theta all the time. Okay. However, the rate of decay for our close options, right, the ones that are expiring this Friday, are significantly greater, right? So we know that these options are significantly greater. The rate of theta decay is significantly greater, so we can take advantage of that. Okay. And so what we're hoping for is that one of two things to happen. Either IV expands, right, because we currently, let's see if I can get this to go backwards. There we go. Okay, so what we know is that if IV is at 0 and IV goes up to like 30, right? We have paid a debit for this at $1.19, and so we know that we can't lose more than the debit we've paid, right? However, if IV expands from 0 to like say 30, what we know is that our break evens are going to go, you know, from like right here, what is this, 58.94, it might get all the way out to 60, right? And this one at 57.53 might get all the way down to 56.5. Right, if IV expands, then our break evens are going to widen and our potential profit goes up, right? Now, if IV doesn't expand, right, if IV stays the same at 0 or 5 or 2.5 or whatever the case may be, what we know is that that suggests, right, we don't know for sure, but it suggests that our security isn't going to move a lot, right? And so we have 3 trading days left until expiration. And so this, excuse me, this line right here, this box is what our probability of profit is right now, right? It's a 1 standard deviation, 68.27% probability range. And so we know that right now, based on the IV being 0, 68.27% of the time at the current IV level, XLU is going to end at expiration on the 16th between these 2 lines, right? Really nicely right now, that corresponds, right? That corresponds very nicely with our break evens. Okay, so our break evens and our probability of profit is actually right now 71.53%, because what we see is that this level gives us additional room, right? So this is our standard deviation line, just a little bit beyond our break even on this side, right? A couple of bucks maybe on the call side, but our standard deviation is actually within our break evens on the put side. So that's really nice, which means our probability of profit right up here at 71.53% is greater than what the actual number suggests. So what happens if IV remains the same? It's likely that the security isn't going to move a lot, okay? That's what it suggests, is that our security isn't going to move a ton, and that this call and this put that we've sold for this Friday has a really good shot of ending within our break-evens, okay? Now, what is the most ideal thing for this trade? The most ideal thing for this trade is for it to expire between 58 and 58.5. If it were to expire between 58 and 58.5, what's going to happen is we're going to get all of the value, right? They're going to expire worthless, which means we get to keep all of the value in the option that we sold. Okay. Now again, we're protected. We're protected really nicely. At a tune of about $600, right? That's all the risk that's on this, and we could potentially get about 150, right? So that's 25% return on investment, or ROI, right? So this is a great trade. Okay. We know right now that we've got a really nice probability. We've got a really nice return on investment, or ROI. So this is a great trade for us to take, right? This is a great trade for us to take on. Okay, and so now how do we manage this trade, right? We manage this trade in such a way that we can add, right? We can add another one if it goes crazy to the upside. We could add at 59 if we wanted to. The other thing that we will more likely do is we'll likely just hold until Friday, and we'll begin making a determination Friday at noon, Friday at 1, and then we're just going to kind of be gazing at it every now and again Friday afternoon, right? That's the goal, okay? That's the goal. All right, so next thing, if we have to make any adjustments in this trade, we're going to make adjustments in this trade. If we don't have to make adjustments, then we're not going to make adjustments. And the next update will come hopefully after a profitable close trade. And we've got a successful trade here, folks. So it is about 3:30 on Friday, and so what we're looking at right here is a screenshot that I just took here on this trade. Okay, and so let's take a look at XLU. Okay, and so what you'll remember is that we wanted XLU for max profit potential to end someplace between 58 and 58.5. Okay, and that's exactly what we got. We've got it at about 58.20 right now, and so we've been watching the security over the last couple of hours, just checking in every couple of 20 minutes or so, 30 minutes or so, just to see what's going to happen. And right now I'm going to let both of these options expire worthless. Okay, so we're going to be able to collect all of the premium that we sold here on the options that are closest to us. Okay, which is really just fantastic. A couple of things that you're going to notice is that these blue lines and the blue line and the pink line have essentially come together because we're right there at expiration. The other thing you're going to notice is that we've went down from about $200, okay, to about $150, right? And so we're going to make about $150 on this particular spread. Risk about $600, and so we're looking again at a 25% return on investment. We continue to have XLU right at a 0% IV, which is great. I think it actually has gone up to about 3% IV, which meant that it wasn't going to move a lot. And so as you can see, we're right now a couple of minutes before the close at 94.84% probability of profit. And our standard deviation for today was right in this little box right here. Really a fantastic trade, right? And here's the lesson. Trading doesn't have to be complicated, right? Trading does not have to be complicated. You just got to know some general rules, right? You got to know your general rules, and then you got to stick to them. That's it. And then you have the ability to be a successful trader. Okay. If you have any questions about this trade, again, really simple calendar spread. I've got some plans, right, for these long options. You'll notice that I still have the long options. Okay. I know what I'm going to be doing with those long options, and I'm not going to be selling them back into the market. Okay. I've got some plans as to how we're going to continue to utilize the IV right now. We're at about 3% IV. We're going to continue to utilize that and continue to try to make some money on this overarching trade here. Okay. If you have any questions, reach out to me at Ryan, RYAN, at sellthatoption.com. I'd love to have you on the other side, getting these, these alerts, having the one-on-one access to me to talk about trading, talk about anything. If you have any questions, reach out to me again at Ryan, RYAN, at sellthatoption. Otherwise, here's a fantastic example of a really easy calendar spread, adhering to the rules that we've set up. And this is how trading can be. Okay, great return on investment for a short period of time. Reach out if you have any questions. Otherwise, happy trading.